Hi, welcome to the insurance channel. My name is Rick Faber. I'm the co-founder of Underwriters Resource. This is the first video in a series of videos that is going to talk about and delve into some of the principles behind how to design a commercial insurance program for commercial entities. So welcome. Welcome to Designing Effective Insurance Programs, a series of videos dedicated to principles in designing commercial insurance programs. Over the course of my underwriting career, which spanned 4 decades, I found most commercial insurance programs were flawed. For the most part, the flaws were not due to a lack of available insurance coverage, but rather errors made by either the agent, broker, or even the underwriter in structuring coverage. To design an effective commercial insurance program, we need to first understand insurance is not a luxury, nor is it an investment. Some life insurance products excluded, it's simply an expense. It does not add to the bottom line. Insurance only subtracts from a commercial venture's bottom line. This fact makes insurance the most expensive form of risk management. After all, there is some truth to the condition called insurance poor. As an expense, its purchase needs to be minimized. That is correct. I'm saying clients should only be sold a minimum amount of insurance. That minimum is the amount they need to adequately protect their business in the event of a disaster, enabling them to recover from the event. If it does not achieve this goal, it is not cost effective. Cost effectiveness is a goal every commercial enterprise tries to achieve as they manage their day-to-day operations. As insurance professionals, we are trying to look forward and trying to anticipate the unpredictable, trying to plan for events which have not happened and prepare for those events in a thoughtful and comprehensive manner. In doing so, we seek broadness and application of insurance to deal with the unpredictable. We seek to cover every foreseeable event and even the unforeseeable events. In and of itself, there is no harm in that. These two factors create a competitive design dynamic. We seek broadness to deal with the unpredictable incidents by selling more. We seek to minimize costs by reducing premiums. For the most part, the focus to reduce premiums usually takes on the form of trying to negotiate rates down. On the surface, this approach makes sense. However, there are issues which makes this approach an ineffective approach. The first is the ability to be able to negotiate better rates relies upon outside and somewhat uncontrollable factors. One of these factors is competition and market conditions. An agent or broker's ability to negotiate rates down to lower levels depends on the level insurers are willing to compete for this risk. With fewer players, it becomes more difficult to drive rates down. With more competing carriers, you often see almost free-falling rates as insurers are aggressively seeking to expand their premium writings. Soft market conditions are markets where the insurance carriers have excess capacity and are usually experiencing positive results. Sometimes it's favorable underwriting results, sometimes it's favorable investment results. Insurers seek to maximize their profits by writing more premium through writing more clients. However, lower rates ultimately lead to less profit and even underwriting losses, creating a hard market. A hard market sees a decrease in competition as capacity dries up or decreases. Insurance carriers pull in the reins and take a more defensive posture. As they do, competition decreases. The decrease in competition causes rates to rise. I agree soft market conditions are much more prevalent than hard market conditions, but hard markets do exist. The point is, the cost-effective benefit of rate negotiation is only temporary. Furthermore, even well-negotiated rates are dependent upon favorable experience by the insureds. The fact is, claims do happen. Sometimes the claims are within the insured's control, and sometimes they are not. Regardless, negative claim experience generally causes insurance rates to rise. The result is minimization of insurance expenses through negotiating is only temporary. Exactly how temporary it is anyone's guess. But as they say, everything is temporary given enough time. Another approach to increase the cost effectiveness of commercial insurance programs will focus on creating structural changes to minimize costs in both hard and soft market cycles. The importance of a structural approach should not be ignored or diminished, since the benefit will be achieved in both the short term and the long term. This is especially important with our commercial clients who are relying on consistency when they in turn price their own products. Consider a contractor who builds a building which will take 18 months to build. They're bidding based upon cost and projecting costs forward past the current policy coverage term. I've seen significant swings in insurance prices turn profitable construction projects into unprofitable projects. Therefore, whenever we can build consistency and sustainability into commercial insurance programs, we should. In another example, manufacturers build their products. They select their price points for their products based upon what they can charge within their market. They do not always have the ability to change prices because underlying costs go up. Hence, the concept of sustainable, cost-effective insurance and risk management programs makes sense for them to follow. Structural considerations focus on some of the following questions. 1. What needs to be insured? 2. Where are insurance dollars best spent? 3. Has duplicate coverage been avoided? 4. Are exposures insured with the best product? 5. Is coverage restricted to coverage which only benefits the insured or what the insured needs to operate? 6. Have more cost-effective risk management techniques been considered? We've come to the end of this video. In the next video in this series, we'll be talking about considerations when deciding what needs to be insured. If you found this video helpful, please be sure to like it and subscribe to future videos. If you have any questions about the subject matter in this video, please leave them in the comments section below or email us at richard.uwresource@cox.net. Remember to like this video and subscribe to our channel.